What is up, guys? Welcome to another edition of the Market Marauder Show. Beating the market one trade at a time. Hope everybody's having a great week out there, able to lock in some profits in this very volatile market. So, what we'll talk about in this episode is gas prices, overall oil prices, some things you have seen wherever you're at your local pump. Gas prices are at astronomical highs. So, let's jump into some of the things going on, give some things and some insights from some reputable investors, as well as one of the stocks that I'm looking at for this oil crisis that's going on here. So, first, we'll jump to the first article. U.S. crude oil spikes to 13-year high of $130 overnight, and this is due to some geopolitical tensions going on. You still have the Russia-Ukraine crisis going on. You still have inflation. There are a whole lot of factors going on that are helping to boost these oil prices going higher. Seems like every day. So oil prices gave up the most of their big overnight gains in a wild session, briefly dipping into negative territory after surging above $130 in earlier session. On Sunday evening, prices jumped as trading began, with the market reacting to supply disruptions stemming from Russian ongoing invasion of Ukraine, possibly a ban of Russian oil and natural gas. So, um, the whole country in general, Ukraine does supply some of the oil as well as Russia applies some of the oil. This is a large global distribution, and so with those pipelines being cut off, you're definitely starting to feel it more at the pump, which means that more of the U.S. resources and current local resources that are here in the states are being tapped to help mitigate that lack. So crude oil is coming off of a high following comments from Germany saying that they have no plans to halt Russian energy imports, indications that the U.S. is exploring replacement barrels from Venezuela and Saudi Arabia. Probably the most important takeaway from the trading action this morning, the situation is extremely fluid. So West Texas intermediate crude futures, the U.S. oil benchmark, and the 1 point spiked to $130.50. This was Sunday evening, its highest since 2008, before retreating. So if you know what happened through 2008, you had the crisis that happened in 2008, which was the housing crisis. There was a lot of volatility in the market as well. So these are definitely factors to look at. If you look at a lot of oil stocks as well, they're starting to go up drastically. So these may be plays that you may be wanting to look at when doing some investing to diversify your portfolio, whether you're a long-term or short-term trader, and especially if you're an options trader, there may be some quick gains to get into some of these plays. So WTI futures settled up 3.2% at $119.40, the highest settle since September 2008. The international benchmark Brent crude settled up 4.3% at $123.21 per barrel. Brent hit a high of $139.13 at a point overnight, also the highest since 2008. So the crude oil prices are just basically going crazy at this point in time. $130 per barrel is definitely a large sum of money. But as far as the entire Russian-Ukraine crisis is going, there's some things that have been said from some reputable investors that I think everybody should take note of. So one of the reputable investors is Bill Ackman. So Bill Ackman is a long-term hedge fund investor. He's a hedge fund manager and has basically said that World War III is already basically started. So I think the thoughts that he had were very interesting and some insights that people should look at, especially in investing. So, billionaire hedge fund manager Bill Ackman has warned that World War III has likely started amid Russian invasion of Ukraine. In January 2020, I had a nightmare about the potential for a pandemic, but everyone seemed to think I was crazy, and I'm having similar nightmares now. And this is what Bill Ackman tweeted out on his Twitter. In early 2020, when fewer than 7,000 COVID cases had been confirmed in the U.S., Ackman, the CEO of Pershing Square Capital, called for a 30-day national lockdown and warned that hell was coming. And so he's been one of the people who have been very successful in trading in general. And so a lot of people listen to the things that he says as far as investing advice is concerned, I wouldn't put him up there on the scale of Warren Buffett. But as far as investing is concerned, he's a very reputable investor. And so when you see large investors, people who have large amounts of capital, who have large hedge funds, start to kind of in an instance panic, it can set panic into the market. So as for you as an individual investor, you can listen to this advice or you could not listen to this advice. Me personally, I don't think it's as bad as some of the investors are really claiming it out to be. I don't think that we've started, World War III with all the things that are going on. We already had some onset of issues that were going on, like the inflation and shipping crisis. Oil prices were already starting to creep up, not as bad as they currently are now. But I think these are things to also look at in the market. You also have stocks in general that are starting to go down. There's a massive sell-off, or some people may say a correction that is occurring in the market. So you see like Amazon starting to go down. You see like Google, Microsoft. A lot of these companies are starting to go down as people are starting to sell off. But a sell-off to me is not like people are selling all their stocks and just holding cash. To me, a sell-off is people are just restructuring their portfolio. Some people may also be jumping into some of the oil plays, just trying to get more money out of the market and just restructuring. So every time you hear somebody say, hey, there's a sell off, it doesn't automatically mean that people are selling their stocks and just holding cash. A sell off could be where people are selling a large portion of their stocks, taking profits. It also is something, around tax time as well. So usually there's a sell off around tax time as well, which I think a lot of people are not taking into consideration as well. After people file their taxes, they really know how much money they had to pay. A lot of people take profits to pay off those capital gains taxes, whether you're doing crypto or you're doing stocks as well. And some people take profits to pay off that large tax bill they had if they had a lot of gains. And so these are all factors that I think are coming to play in the market. There definitely are market pressures. Later on in March, we do have the Fed who's going to be making a statement talking about their plan to raise interest rates. I don't think it's going to be any information that anyone is going to be shocked to hear. The Fed's kind of lagged the market at this point in time. We've kind of waited for interest rates to be risen a long time ago, and they haven't really been putting the pressure that they could do on the market. Interest rates are still very low, like about zero at this point in time, but we're still waiting for the market to turn around. So when you hear news like this and you see large hedge fund managers, start to panic and say, "Hey, this is kind of the beginning of the end," I wouldn't necessarily freak out about it, especially considering how reputable they are. They do have a lot of influence, but at the end of the day, it's you, your money, and your account. So you have to make the decision on that. I would say do some more due diligence on it and also look into some of the oil plays. So, one of the stocks that I've been looking at that has had a pretty crazy 5 day run has been ticker sign INDO. This is Indonesia Energy Corporation. Now, in their past 5 days, they've gone up 390%. So they've gone up $48.95 in the past 5 days. So that's a crazy amount of volume that's gone. This has kind of been incited by a lot of the Russian Ukraine crisis that's gone on. And so I think if you look into the oil stocks, you look into a lot of the oil plays that are out there, there are deals to be made on that as oil prices continue to go up. So as you see the oil prices go up, you start to see more people go into oil plays. You also had Berkshire Hathaway talk about how they have ticker sign OXY as one of their holdings, and they hold a large portion of that. You had a lot of people who are selling out of that as well. But with a company like Berkshire Hathaway, which is ran by Warren Buffett, the one of the greatest investors of all time, having a large position in the oil company just goes to show you that there is money to be made in the oil stock. So hopefully that information helped you all. Like I said again, you have been seeing these pressures of gas prices continue to go up. If this crisis is not really mitigated anytime soon, you could continue to see oil prices continue to go up as the problem is mitigated. There are also a lot of people who are switching over to EVs as EVs have become very popular, but the EV stocks are kind of hurting as well at the time. So I would say oil stocks are definitely something to look at as people are switching over to using more U.S. oil companies to kind of combat this shortage from the Russian and Ukraine pipelines that have been distributed. and you will see these oil prices continue to go up for some time. I would say one of the indicators that's going to help this is the talk that's going to happen later on in March from Fed Chair Jerome Powell. That will definitely give a great outlook on some of the inflationary pressures that are going on in the market and help you to make a better decision. They kind of outline some of the things to look for. Like I said again, the inflation and shipping crisis is the number one and number two issue that's going to be on the board for that talk. But this is kind of a unique situation that we have this Russian Ukraine crisis. So I believe oil price is going to be something that's brought to the table when this conversation happens. So hopefully this information helped you all out. Make sure you guys look at some of the oil plays that are out there. There's definitely tons of value to gain out there. All the oil stocks are not at this price. There are some that are under $5, so that can definitely help you all out. If you are a new investor and you don't really have much capital to jump into any of the oil plays, there are some out there that are very relatively affordable that you can jump in that are starting to rally. So hopefully this information helped you all out. Good luck to everybody that trading, and I'll see you guys on the next one. Peace.